And how are you uh, measured effectively by Alpine investors? Like, what is your metric?
Right. Well, what we try to do is we try to return above the hurdle rate of the fund. So the fund uses a term called MOIC, multiple on invested capital. That's just, a very basic way of saying how many times we have increased the amount of capital we were allocated. And Alpine has a hurdle rate for that, and we are measured on that. And so those vary across the private equity world. And at the end of the day, what we try to do is when we bring in the businesses, we build them, we add to them, we organically grow them, and we exit them at some point in the future. We have a longer term hold horizon. Sometimes we hold forever or longer. But when we exit, ultimately those businesses are marked and we're evaluated on how well that's done.
So, okay, that makes sense. So, uh, you would get an allocation of capital. Let's say you get $100,
Right.
and they say, Steve, we want you to make this worth at least $200,
Right.
and we'll consider it successful if you achieve that. But that, I'm just obviously making it very
Right.
simple for folks. And again, this may be territory you can't share, and I totally appreciate it if you can't. But what is the hurdle rate? If you can't share that specifically, maybe you could just give me general benchmarks for kind of private equity. What would the range be on that hurdle rate?
Yeah, I mean, we've always tried to peg ourselves into a pretty high percentile. So, MOICs are in the range of, what you have described, 2 times, 3 times, 4 times. The actual mark is something I think that they keep to LPs.
Right. So 2-3 times over what time frame?
Traditional private equities call it 7 to 10 years.
Okay, so that doesn't sound that hard to me. Like tripling the size of a business in 10 years.
Yeah, as I say, we tend to set a pretty high bar, so ours are a little higher, especially in the vertical SaaS world. That's kind of like when you think about the hurdle rate, that's kind of your base level return that you're trying to promise your limited partners. We have internal targets that are substantially higher than that, and we obviously benchmark ourselves on being a top 5% or a top 1% firm. So I think there's a little more juice there. But I think the job is doable, which is why we do it. But there is significant improvement we have to make in the businesses to get to that.
Yeah, I would think so. And how do you think about debt? So a lot of, again, this may be how Alpine investors structure the capital they give you. Is that debt? Is that capital that you can then borrow against, or is Alpine investors levering up their fund and then giving you the money? Then you have that pot effectively. You can't then double lever it if you do you know what I'm asking?
Yeah, we run leverage at the ASG level.
Okay.
So we get an allocation of equity, pure equity, and then we do our best to bring in as much. We do our best to lever up the businesses. We've always been relatively conservative with that. So we want to make sure we've got enough money to grow the businesses and continue to add and grow. But we have used debt historically, and we continue to do so in a pretty traditional private equity way.